Did you start yet, Chantal? Hello, everyone. Welcome to the Pro Trade Room Plus, Revised University of Michigan Consumer Sentiment. My name is Lee Goldstein. I'm the trading director, 10-minute trades. Please remember that all the trades we discuss are for educational purposes. It is possible to lose money trading futures. That's me. Good morning. Trade carefully, please. And let's get going. Okay, everyone. Revised University of Michigan. This is a trade that I'm taking. Let me just put the news up for everyone. So we've been getting a nice turnout in the room. We do have quite a few new people. So don't be embarrassed about asking questions. You're allowed, okay? You can ask questions. I'd like to see more questions in the room. Generally, I'd like to see more participation in the room. If I had a wish, I would wish for $1 trillion, and then I would wish for more participation in the room. Let's get started. Let me put my news up. I would at least like a response to my jokes. That's the only thing that really matters to me. Are the jokes working? So if I crack a joke, just if you like it, just type ha. And if you don't like it, type not funny. All right. I just need to know if the jokes are working. Because when I start performing music and stuff, and I'm getting ready to do some shows, I need to know which jokes are working. Okay. Michigan, consumer sentiment and inflation. So it's a dual report. And that's why there's always been interest in this report. Years ago, we only traded preliminary because years ago it was the preliminary version that moved markets. And then over time, we found that revised was starting to move the markets as well. So we now have setups for both. They're not always the same because it is a different reaction depending on, the particular news event. All right. Now we have been testing an ES trap trade on this setup, and I do want to welcome our YouTube friends, folks that are watching us on YouTube. Thank you for watching, and hit the like button, please. We need the likes. It really helps us. And I just want to welcome everybody on YouTube. Thanks for joining us. So this is a trap trade. Let me show you the DMM. And I'm really looking forward to, we are definitely doing a software upgrade, and I'm hoping it'll be out before New Year's. That's my goal. It's going to be tight. If we can get if I can get the programmer cracking on it, we could make it before New Year's. The problem is that means it's got to be done a month from now because he takes a vacation less than a month from now. Probably not going to make it. Now that I'm really, really thinking about it, it'll probably be right after New Year's. But I think we'll have a beta version. That's what I think. I think we'll have a beta version that I'll be trading over the holidays. So that'll be good. That'll be very good. So the setup for this morning, I said we were testing an ES trap, and my testing, not liking it right now. I'm not loving it. I'm staying with gold for today. I like trading this report. It's not a gigantic mover, okay? And I think based on last month and based on some previous behavior, we should get a good little trap trade out of this report. So I'm going to set up the trade first so we're ready, so I don't have to feel like I'm being rushed. So I click on the trap trade because the trap trade is a separate strategy, okay? And I've got tiers. Whenever I think of the word tiers, I think of Eric Clapton and Tears from Heaven. And I'm going to go, our stop is 20, and my tier 1 is 12 ticks. My tier 2 is 20 ticks. The time of the event is 10 o'clock, and the account warnings are off, and the prep time is 5 seconds. Now, who would like an update to the trap trade so that the time works exactly like it works on the breakout trade? So in other words, we know we're doing this 5 seconds prep. So the time of the event is 10 o'clock. 5 seconds before the event, we put our orders on the chart. Wouldn't it be easier to just do activation 9:59:55? There would be more consistency between the two setups, between all the setups, really. Would be much more consistency. It would be one less thing to think about. I agree. All right. Tier 1 of 12, tier 2 of 20, time of event is 10. For today, the activation prep is 5 seconds. That means our orders will show up on the chart 5 seconds before the news comes out. And our stop is 20. All right. Let me show you last month. Now, I don't particularly care for Eric Clapton. I think he's a conspiracy theorist. And but he played a lot of charity concerts with Gary Brooker from Procol Harum, and so I forgive him for everything, really, because he's a good person in his heart, but he's discombobulated in his brain. Stop at 20. 5 second prep. All right. But man, he can play guitar, can't he? The market's just opened at 9:30. No surprise there. So you're seeing movement in the ES. I'm also watching the ES. Okay. And then why does this report have impact? It's an inflation expectation report and consumer confidence. So it's got two elements that can affect the market. All right. Now, we expect that gold will calm down by the time 10 o'clock rolls around. Now, anytime we do a trap, almost always for an oil report, almost always we will have a spike sheet. So I think everybody now understands the purpose of the spike sheet. If you understand the trap, a trap trade, the biggest enemy to the trap trade is an explosion in one direction. And then if it doesn't reverse, that's even worse. But if it explodes in one direction, beyond your tiers and your stop, that's the trap trade's biggest enemy. So if you create a spike sheet, if we create a list of all the initial spikes on this report, we have a way to gauge if our setup has initial safety. Initial safety meaning, will we survive the spike so we can manage the trade? You don't want to have a trap trade setup where you're continually not surviving the spike. So look at the spikes. In the past year, more, going back to July of 22, okay, July of 22, the biggest spike was in August, and it was 30 ticks. So how do you figure out what I call the zone of safety? I love that, the zone of safety. All right, our zone of safety is tier 2 plus the stop. It's really simple math. Tier 2 plus the stop. That's the zone you would survive the spike in, right? That's our zone of safety. So if our tier 2 is 20 ticks and our stop is 20 ticks, we have a 40 tick zone of safety. If there's a 45 tick spike, we're getting stopped out. So we have a 40 tick zone of safety. The closest it's ever come is 30 ticks. So our setup, initial spike setup tiers make sense. And then we also look at the quality of the reversals. All right. And that gives us an idea whether we can expect a good trap trade. Does it reverse regularly? Does it not? Last month, it was a very fast move. And I started recording. Something happened to my recording, and I only have after we were in the trade. You can see that the price burst down and then it reversed up and we had a profit. Okay, it was a pretty good little trap trade, normal trap trade. Let's take a peek at September. Now, on a trap trade, years ago, we used to trade the trap trade very differently. And I think that everyone should go to our website, make an account for yourself, it's free, and watch the quick start video on the way we used to trade the trap trade in the very beginning. Because there are some elements of that adjust concept. That's the key I want you to watch, the adjust concept. There will be times when you might want to pull your orders into an adjustment. In other words, if you're 1 or 2 ticks away from being filled and you feel like the burst is over, you might want to force the fill if you're anticipating that reversal that we expect on a trap trade. And you could see in September, we got another nice reversal. Don't forget, on the trap trade, we have our buttons. I'm going to go over the buttons at the top of the chart in a second. In a sense, the time is a tiny bit less important on a trap trade. It's a tiny bit less important in terms of sync, because the trap trade especially years ago, more so than today, we used to be much more, we had a lot more different starting times than we do now. We did trade the trap trade. We made significant differences recently, I would say over the past year, than the way we traded it 3 or 4 years ago. 3 or 4 years ago, the amount of time that we put our orders on the chart before the event was much longer than it is now. And also, the fact that you weren't in sync, because we would sometimes wait 15, 20 seconds to take the trade, not being in sync 0.2 of a second doesn't matter. But I would still always follow the rule of going to time is and making sure your computer's in perfect sync. I think it's better to always check that you're in perfect sync, because I think ultimately you want to retrade based on time, and you want all your time aspects to be correct. So yes, it's fine to understand that there are differences in the way and the importance of time on the beginning of the trade, for instance, is a little bit different in a trap trade. But I think as a habit, as something you want to continually do over and over, I think it's a good idea to always be in sync. It's just a good habit to have all the time. Okay. Now, hey, everybody on YouTube, hit that like button. Give us a like. I know that you like seeing the way that we're going to trade this event. All right. So definitely looking for a change in direction on this report. We have buttons, all right, that help us manage the trade, just like we have buttons on the breakout trade. If your chart is too narrow, you won't see all the buttons. So make sure your trading chart is wide enough so you could see all the buttons. And the last button is combine, is cancel. No, it's combine. Okay, so make sure, see, make sure your charts are wide enough to see the combine button. That's important. The combine button just combines multiple open orders into one open order. Or let's put it this way, one position with the same amount of orders. So if you have two open orders at two different locations, you hit the combine button and it combines the location into one, same amount of orders, obviously, and it combines them to the closest price to the current price, closest order to the current price. So if you have an order at 2005 and you have another order at 2006, if you hit combine, it brings them both to 2005, the closest order to the current price. The break even button, if your trade is in profit, it has to be in profit for the break even button to work. If you press the break even button, it moves your stop to break even plus a tick. Think about, why does it have to be in a profitable trade? Because if you were not in a profitable trade, your stop would move to an illegal location, a location where you can't put the stop, and it would generate an error. If you are long, you don't want your stop above your price. It's got to be below your price. So if your stop were to be put above the price, it would generate an error. So that's why the break even button has a protection in it. Because in the heat and excitement of a trade, it's easy to hit a button incorrectly, and you wouldn't want your stop to accidentally move to the wrong place, and maybe it'll destroy a good trade. You know what we're saying. The close button closes the trade, just like the close button does on the chart trader. The adjust button, for now, we're not using it. For now, we're not using it. And then finally, two more buttons. Cancel. Cancels the outer tier. If you only one of your orders fills, and the product, I say that all the time, and your price starts reversing, and the trade has now stopped moving in one direction, and you feel reasonably certain that it's changing direction, you and your outer tier, your second tier, did not fill. As you start to manage the trade, you'll notice, hey, my order's in the way. I can't move my stop to safety because that extra order that didn't fill is in the way. What do I do? So you cancel it. We have a cancel outer tier button. You cancel the order, and then you can manage the trade properly without anything being in the way of your stop. And then if you happen to have two orders or more open and you want to combine them into one location, one position, that's what the combine button does. All right, let's look at just for fun. So in the course of a normal month, sometimes you have a report that has preliminary data and revised data. And usually about 10 days to 2 weeks after a preliminary report, there is a revised report. And like I said at the beginning of the room, it used to be years ago that the revised data never created a move. I hate to use the word never, but rarely created a move. This was our initial University of Michigan report. And I think was our watching gold on the right, and we've been trading ES on the left. And it looks like we were a little bit big on our tiers. Let's see how long we waited. Usually I'll wait. So I waited 30 seconds. You can see it's starting to reverse now. That makes me very seriously think cancel, because the initial move is over and I missed it. Okay. Now, remember what I said about moving your target or moving your order into the price? That would have been an instance where if you thought that the downward move was over and you had the wherewithal to get your order moved, it was not easy. I don't think it really would have been that possible in this particular setup because it was only a nanosecond. But sometimes price will hang down by your order and give you an opportunity to pull your order into the price. I think this particular day, the opportunity wasn't really there. In other words, you want to bring yourself in a little quicker. All right. Okay. Here's the setup we're using. We've got tiers of 12 and 20, and we've got a stop of 20. So we've got a 40 tick zone of safety. The time of the event is 10 o'clock, and our activation prep is 5 seconds. Okay. That's our activation prep. We checked our time sync. There's no law that says you can't check it again. You can do whatever you want. Anytime, Eva, anytime. Just don't be late again. I used to be a member of some rooms where if you were late, they wouldn't give you the setup. They wouldn't tell you the setup. I've been in some crazy rooms before, let me tell you, where the moderators were so rude to the members. I couldn't believe it. I couldn't believe it. I'm not going to mention any names. Some of them are still in business. I don't know how, but they are. I mean, what are we doing this for? We're doing it to try and help everybody. Yep, that's right, Steve. A buck in the jar. If you're late, you put a buck in the jar. All right, so we've got about 7 minutes to go. We looked at a bunch of videos. Um, we looked at the spike sheet. Let me just see if we have. Let's go back and look at an old revised video. I might have some real old ones. Let me see. I can go back. Well, 2020. That's a while ago. This is like 3 years ago. Revised University of Michigan. What's interesting is it looks a heck of a lot like what we're doing today. The charts are not radically that much different. But we were trading a breakout. Okay, we were not trading very many trap trades. That was right at also pretty beginning of the pandemic, October 2020. I was probably sitting in my office with a mask on. I remember walking in my neighborhood outside at the very beginning of the pandemic, and everyone that you passed on the street was wearing a mask, inside or out. It was so rare not to see someone without a mask. Now, I'm not a very good looking person, so I love wearing masks because it hides how ugly I am. So I like wearing a mask. Now you could see in October, just not much of a move at all on this report. And we were dealing with multiple issues back in October of 2020. We were starting to realize, hey, we're trading pandemic news results now. And oh my goodness, the news that's on the radio and TV and internet and everywhere is so horrible every second. It's overshadowing all of our normal news reports. And our normal news reports are having lousy reactions. And we had to really do some quick pivots and come up with alternative ways to trade. And it's interesting. It's very interesting how things change over the years. Back then, we traded every coin toss. And back then, when I really think about it, our trading account was always hovering around flat. We'd make some money, we'd lose some money, we'd make some money. It was always hovering around flat. We were trading too much. Probably if during the pandemic we traded the way we trade now, where we're trying really hard to trade the best of the best, then we might not have had to have pivoted so hard trying to find new setups. The big bonus that the pandemic gave us was a lot of new trade setups, the squeeze play, the trap squeeze, some of the things that we don't do so much anymore, but we need to have a deep dive webinar about extra features in our software. And maybe when the new version's done, we'll do that, because I've got what I think is a really important update as part of the software that I think will be a really good excuse for a couple of webinars to teach more about the software. There's a lot of things that we just don't use that I think you'd like to know. Anyway, I think we're doing a great update to the trap trade. And, every day when we wind up in this room, my brain is always going, and I'm just thinking, I don't know if it's too late, but I was thinking about one more update on the trap trade that I'd like to do. All right, let's get ready. So I don't think that we're going to get a 70 tick move on this event. It's not my expectation. We haven't seen anything like that in a year and a half almost. Let's say a year and a quarter, going all the way back to July of 22. So the market, you could see the market seems to have quieted down a little bit. The market open was a push up and gave back every penny it went up, plus some on the ES. What's certainly interesting, gold still above 2000. It's like a magic number for gold. Oil is the crazy one. Oil's like the misbehaving kid at the dinner table. It's just out of control. I don't know how. I mean, I do know how people trade oil. Oil's got great volatility. And sometimes it just responds so unusually to news that it's really surprising. So, folks on YouTube, we've got a whole bunch of people watching. Not one single person has pressed the like button. Just give us a nice like because it shows us that you appreciate our streaming and bringing these trades to you. So, hit that like button. And then a million people will get presented with our video in their algorithm. That's what the like button does. All right, we got 30 seconds. The brackets will show up right about now in a second. There's our brackets. Okay, so there's our orders. The news is coming out now. Now, look, we don't have a very big set of tiers on this report. So our first tier is filled. I'm not thinking cancel yet because it looks like it might fill that second tier. It does. Now, if it just keeps pulling down, we're going to get stopped out. But if we get that reversal that we expect, then we should wind up with some profits. So now it's a question of waiting, the hard part of the trap, okay? The hard part. Obviously, I'm not in love with the move. I want to see a change in direction. So all we can do is wait now. And look for a change in direction. Watching, not happily, not happily. This has been one of the most frustrating weeks I think that I've ever traded, because it was far enough away, way far enough away from the low. One of the issues is the news was a little bit too strong in one direction. I think that hurt. And, it feels like the market picked off our stop, but I don't think so. I think today it was just a breakout and it wasn't a trap. And it's the reason I'm feeling so frustrated is because every trade that I was watching was a fantastic winner, and all my favorite trades have not been working this week. It's just very, very frustrating. I mean, that was a trap. We haven't had that kind of move. Look, folks, I don't have to show you. We looked, our spike sheet was a safe setup, and it just didn't reverse. It just didn't reverse. What worked against us was 4.5 on inflation expectations. I mean, just too much news in one direction. It's still not reversing now. It's still not reversing. I mean, this is a report that generally reverses, and it's still sitting almost where we got taken out. Now you would expect for the low to get tested. That's what I would expect. But I really felt that we had plenty of room between where we were and where the important levels were. And this is an aberration on this report. That's the frustration. It's an aberration. Because not only did it go past our stop, but it's showing no propensity whatsoever to reverse. I mean, I would think it will test the low and break through it. That would be my anticipation. So, of course, it's frustrating because there's been trades we've watched this week. That's when it gets frustrating. When the trades you're serious, the trades you've been making money on don't work, and trades you've been watching because they're not performing, when they work, that creates tremendous frustration. So now, finally, it's starting to do a little bit of reversing. So we've got to deal with crude oil. So let's move over to crude. Let me just do a couple of things in the background. Let's take a quick look at the video. I mean, we didn't do anything wrong on that report. That's an out of character move given the way it's been moving over the course of more than a year and almost a year and a quarter. Monthly. It's not like a quarterly report. This is month after month after month after month. This is not how this report's been working. Let's take a quick look at the video. So looking at, what you're looking at on the setup is we're plenty far from all important levels for this trade. And it almost looked like it wasn't like it didn't burst to a fill. It didn't burst to an immediate fill. It kind of took its time getting down there. I mean, in my mind, I wasn't even sure it was going to hit that second target. Okay, now you're pretty sure it's going to hit the second target, but no real reason to worry that it was going to not reverse when the history is reversal, reversal, reversed last month, month before. Now, I mean, I definitely don't agree with taking those 4 ticks. That was way too soon to know even what was going on with the trade. Now, if you had a reason why, that would be different. But otherwise, there was no reason to get out. I don't call it a good call. I'm not sure why it was done, other than, I need a reason why that would be done. To take 4 ticks. So that's what I'd be curious what your reason was, Frank. I'm not saying I think it was lucky, but it would not have even entered my mind to exit that fast. There wasn't really a reason. Would I be happy if I did? Of course. It's never anytime anything happens that prevents a loss, that's a bonus. All right, so looking at oil. All right, let's look at the DMM. Let me just start the room and start the video. Hang on 1 second, folks. Okay, let's get ready. Okay, welcome everyone.